Hello. Have you ever wondered how the consolidation exchange rates are determined or calculated? Or have you ever wondered on the memo descriptions when you have a look at the consolidation journal entries? So this session is essentially geared towards helping you understand what those information are. So this is revolving around consolidation. So we're using global consolidation in this case. And we'll be dealing with entities 800, which is a base currency USD. And we also have another entity, which is 600, base currency is AUD. And the consolidation currency is going to be AUD. So for this purpose, let's just have a look at how the USD base currency transactions or opening balance will be consolidated. So I have here a transaction against entity 800, which is the US dollar. Yeah, which is the US dollar. So let's have a look here first, just to make sure that we have that there. So, yep, so let me just show you the opening balance for entity 800. So I have this opening balance posting date 31st of May 2025. And I just have here for this account, and I can just change this as well to just have a look here. I'll be allowed to do that. So accounts receivable, just for demo purposes. So you have accounts receivable, hoping that, all right. So this is the opening balance for entity 800. That's what you can see here. We have a debit of accounts receivable in USD and a credit to retained earnings account for $100 USD. And let's have a look. So that's dated again, which is 31st of May 2025, assuming that's the first transaction for this entity. And let's have a look at AR invoice. And just get rid of this one here. But instead, let's have a look at creating an AR. So the reason being is that for us to understand what will happen, right? If a new transaction is being consolidated versus any opening balance, right? So I'll post it in June 16. Let's use that same customer. And I have tax implication here. So I'll just use ancestral GST there. Just have a look. Let's fill out the term. All right. Make that 30. And transaction currency, let's just make it USD. All right. And this entity that they have is also in USD. And just put other income here. Let's just make it simple then. And I have to choose that 800, right, which is USD. Base currency USD. And sales tax, I'll just ignore that one. No sales tax. So we just have $10 in here, right? So remember, we have transactions for entity 800. One is the opening balance for accounts receivable and retained earnings. as of 31st of May 2025, and we have this transaction on a year invoice, right? Which should be posting to accounts receivable as well, but in USD, which is 10, and other income, right? Which is a P&L account for 10 US dollars. Okay, and let's have a look at the consolidation book. So if I go to consolidation here, setup book, and US here, I've created this consolidation book earlier. So let's have a look at this one. It's consolidation book. You have it here. You will see that the currency, consolidation currency is AUD, and balance sheets accounts translated through ending spot rate, while weighted average for income statement account. And I have the cumulative translation adjustment for net income and net assets to posting to CTA. And I've chosen this one. May not be applicable, but you have this option anyways to get an elimination adjustment. Anything, any elimination will be posted to this account. So you can have separate accounts essentially, right? And I just would like to have a look at this one here for accounts to override. So I said that, let's go back here first. So entities to consolidate, we said 600, which is AUD, and you have USD in here, which is 800. Accounts to override, I just made it like retained earnings based on historical rate, consolidation exchange rate. So consolidation exchange rate for me, for retained earnings, just 1:1. If it's from, you can just have a look here as well. So this is consolidation currency, consolidation exchange rate. So if I go to company exchange rate types and consolidation exchange rate USD AUD, what I mentioned in here is that it's going to be, yeah, from, yes, this one here, from the 1st of May 2025, it's just 1:1 if it's from USD to AUD. Right. Okay, let's proceed with the consolidation. All right. So I'll be consolidated. So I'll be consolidating from from May 2025. It's all because what we are saying is that when we try to consolidate, it should be prior to the first transaction, right? So my transaction in here is ending May 2025. So I'll be consolidating on that day. I can just make it there, or it's okay as well to have a look at consolidation for. I don't have any transaction anyways on the 30th of April. So let's just consolidate. If I go to all consolidation in here, and yeah, or consolidation, all run consolidation. Then if I use AUUS in here, so we're talking about 2020. I know that I have transactions for entity 600, but I'll just consolidate. We'll just focus, right, for entity 800, which is USD. I'll be converting into AUD. So you have this one here. So let's just consolidate first from April 2025. All right. And I'll just consolidate, click on consolidate in here. All right. All right, because my first transaction was May 2025, so a month before. I can consolidate on April 2025 to ensure that the balances are okay. So it's in process at the moment. Just refresh this one, and yep, I have been informed that has been processed, so no error, which is good. So let's have a look at, let me just open up that consolidation journal entry for 800 just to double check. So that should be the title of that. And so what you can see here, activity for the month of, okay, let's have a look at the 30th of, okay, so I just have those postings anyways in there. That's okay. Yep, I have other ones there, but our transaction were primarily for May anyways, right? So let me just have a look at, let's consolidate this again for May. And we have opening balances right there. But yeah, for some reason I have transactions for April, so let's just ignore that one. And let's focus on May transaction in here, specifically for accounts receivable, right? And the income as well. So as what you can see in April, there's no accounts receivable posting in there because the accounts receivable beginning balance was actually posted on the 31st of May. So let's just ignore this transaction for April, but this is just a typical, this is the best recommendation anyways, right? It's the best practice to consolidate a month prior to the earliest transaction. I was assuming that there was no transaction for April, but apparently there was. So let's just ignore that for this purpose. And let's refresh the screen, consolidating May now. And just for us to see the, okay, still being consolidated, which is good. It's doing something. Still in process. I should be notified anyways once this is done, whatever the result is. But I haven't seen that email yet. All right. So it looks like May, and you're not seeing it on the screen, but there's a pop-up in here saying that offline consolidation has been processed. Now, let's have a look at the journal entry created. All right, so we're just talking about May, and just as regards 600 here, but let's look at 800. So what are the postings for entity 800? So we know that as of May, we have accounts receivable, right? Which is $100, which is the beginning balance, establishing the beginning balance for June, ending balance, right, of May. So we have 100 USD and retained earnings as 100. So you will see in here that the exchange rate is 135, right? And while the USD, this is for accounts receivable, we mentioned that the consolidation rate is actually equal to ending spot rate. So just for us to validate, right? So let's have a look at Owanda. So I have here Owanda open, and we're talking about as of May, right? May 31, but with my setup, if I'll be able to show that with you then, let me just duplicate this one here for maybe easier. So if I have a look at general ledger, and if I go to setup, configuration, and let's have a look at the whatever chosen here. Yep, so multi-currency management. So this is the best practice as well for Australian region, right? Since Owanda may not be finalized by the time by the first day, first thing in the morning for the previous day. So it's best to have the intact rate option 1 day prior. So which means that if I'm having a consolidation or any foreign exchange rate on today is the 8th of July, then I'll be having like exchange rate as of the 7th because that's already been finalized anyways, right? But if I say 8th, first thing in the morning, it's not yet finalized, so it might actually change. So it's best to have the intact rate option in here as 1 day prior. All right, so let's go back to that one. So what did we come up with? So from here, we know that exchange rate, right? So just for us to validate the exchange rate, ending spot rate. So what you can do is that I consolidated it for May. So since my preference is 1 day prior, so I should be looking at the 30th of May, right? As the rate. And I have it here, and this is the rate, essentially. So 1.55, right? 346, which is the average ask or buy price. In this case is, again, 1.55346. So let's have a look at this one here at, okay, 346, or round it up to 2 decimal places, right? So $100, $100 times 155.35, right? 155.35, $100 times 1.5535, then it should be 155.35, right? So that's what we're seeing in here. But you will notice in here that the retained earnings, even if it's USD, why do we still have seeing it as 100? It's all because, remember, when we consolidated, or when we defined a consolidation book, right, we know that the retained earnings from here will be based on a custom exchange rate, which is 1:1. So in this case, 100 USD times 1 essentially is 1 in there. All right, so the purpose of this demonstration is for us to see the memo in here as well. So consolidation, you will see here consolidation. Consolidation, this for every transaction that is being consolidated, or any transaction being done on the month of consolidation, you will be seeing a memo there as a consolidation. That's just how it works. Consolidation in here. All right. So just disregard the other ones there, but what I would do is consolidate June instead. So assuming that accounts receivable and retained earnings were the only postings for um, this entity, so we should only be seeing those two essentially, right? And any adjustment in there. So we'll be seeing here as CTA net income adjustment is all because of the difference between 155 and 35, right? So net income adjustment, and that's what we defined anyways in the consolidation book, which is 36,000 cumulative translation adjustment. All right, so let's proceed with consolidating the June one, right? And let's have a look at the impact on accounts receivable and the income as well. Remember, we have a $10 USD income and a receivable posted for June. So let's look at consolidated options. So you can look at consolidated options. So if you look consolidated with option, these are the ones being calculated for you from Owanda rate. Okay. So just for us to double check again, we are looking at the USD base currency, right? So let's double check again here, ending spot rate. If I go to Owanda, so this is June, so 1 day prior. So we should be looking at June 29, right? So if I look for June 29, which is this one. Okay, let's have a look at the rate. So we should be seeing at this one here. 1.53172. Is that the correct rate that we're seeing? Yep. So rounded out to 4 decimal places, 1.5317. So 1.5317 for decimal places, right? This one here, which you can override. But interestingly, let's have a look here. 1 day prior again, right? But that's for ending spot, right? But weighted average. So we are talking about the um, rates for the whole month divided by the number of days for that month. All right. So how do we come up with 1.5417? Okay, let's have a look. And let me just share my other screen here. Okay, so before we do that, so have a look first here. It's 1.5417, right? So what I've done is that consolidation sample in here. I got all the rates essentially. Hopefully you can see my screen here. I got all the rates from June 1 until the 30th of June. All right, so just a bit of caveat in here. So remember that the exchange rate is 1 day prior. So I dated it June 1, but this is actually the rate on the 31st of May. While the rate on June 2 is actually the average, right, buy price or ask price as of June 1. So it should be 1 day prior essentially. So everything is actually coming from Owanda, this one here. And maybe I can just show Owanda as well, just for us to just share my screen in order for us to validate the rate, right? So let's look at this one here, right? Or maybe just randomly. All right, so I say here on June 9, the rate is 1.540, 1.54029, but I should be looking at June 8, right? So if I change these, just for us to see, let me just, so we're talking about June 8, all right? So 1.54029 is at the rate there. Sorry. 1.50429. All right, so let's look, for example, June 20. So we're talking about June 19 here, right? So if I change this to June 19, and let's have a look at the rate, is 1.53802. Is that right? Okay, if I go to Wanda here again, 1.53802. So hopefully you get that logic in there. So essentially, it's the average ask or buy price that I've logged in here and plot them for the whole month of June, right? So one more, let's just double check this one here. So let's say 30 of June, but this is actually the rate on the 29th, right? So 29th of June. So if I have a look at this and change this to 29th of June, and you will see here 53,172. Is that the rate that we're actually seeing? 1.53172. All right, so the weighted average being calculated in the consolidation book, which is this one. All right, so this one here is that let's validate the amount is 1.5417. That's what we can see here. If I look at that spreadsheet, all right, let's have a look from 1st of June until 30th of June. And what's the average rate? Yep, well, you can see here, it's 1.5417. If I go back to intact, it's 1.5417. So hopefully that gives you context on how ending spot rate is being calculated or determined or retrieved, and how weighted average rate is being calculated. Because it's the trick here is a weighted average because it gets all the rates for the whole month, add them all together, and divided by the number of days for that month. And as I mentioned, in my case, I have 1 day prior, which is best practice for Australian customer, just to make sure that the exchange rate is already finalized first thing in the morning. Um, when the users start to transact. So if June 1, we should be looking at the May 31st, right? And June 30th rate, we should be looking at June 29th rate. So as what you can see here for weighted average, that's indeed the average rates of all the rates for the whole month of June divided by the number of days. In this case, 30 days, so the average is 1.5417 is what we can see here. All right, so let's click on consolidate. Let's consolidate June. And just for us to scrutinize the consolidation journal entries created, especially the memo. Let's refresh this. All right, just to give you a context, right, on the, so we have accounts receivable, which is consolidated based on ending spot rate. Retained earnings, we just have the historical rate, which is 1:1. And for June, we have an accounts receivable of 10 USD and an additional and other income, which is P&L for how much is it for 10 USD as well, right? So let's have a look what's the how the consolidated journal entry will look like, especially for entity 800, because we don't need to bother about entity 600 because entity 600 is AUD 1:1 there. All right, looks like it's doing something. Let's have a look here again. We have consolidation, run consolidation, and it should default to the one that I've run. Anyway, so it's green now. Let's have a look at the journal entry created, especially for June for entity 800. All right, let's have a look here. This one. All right, so what can we see here? Okay, let's look first for consolidation. What we said in consolidation. Consolidation, those are the fresh transactions. Those tagged as consolidation are like entries related to transactions that are created during the month of consolidation. In our case, we only have a debit of accounts receivable for 10 USD and a credit to other income, $10, right? For accounts receivable, we have 1532, and we have a look at the Owanda rate, 29, right? So that's 1.5317. That's what you can see here. It just keeps on popping up. Sorry about that. 1.5317, right? So, all right, so we have it here. Okay, June, just to make sure that we have the correct rate. We have, okay, 15.32, if multiply it right, so 10 times 1.5317. So that's going to be 1532 rounded 2 decimal places. So this one becomes a 2. So 1532, we have established that one. And we know that for this one, which is other income, then this will be consolidated, right? Based on the rate here is based on what we calculated here, which is, yeah, it should be 1542, right? Because 1.5417, then times 10 is going to be $15.42 AUD. All right, so let's go back to that. 1542 in here, right? And any discrepancy, right? In this case, we have, yep, we have cumulative again with 10 cents difference just to balance it out. Yes, a difference in, we know that if it's going to be a difference between net assets, right, then it's going to be posted against 3600. and CTA net income adjustment in this one here. Right. But let's have a look here. Why do we have posting for accounts receivable against balance sheet adjustment? All right. So remember, we have um, the rate for, we have a difference, right? We have an increase of accounts receivable of 10. We know that. Right. But let's have a look. Remember that it's a balance sheet account. So the balance sheet account will need to be reinstated essentially, right, to the current rate. So if we look at, we have 100 beginning balance, we have 10, right? And there's a change in the exchange rate. So exchange rate as of June 30, which is essentially 1 day prior. So 1.53, let me just get my calculator here. 1.5317. So 1.5317, then minus, let's look at the rate as the end of the prior month, right? So what's the rate at the end of the prior month? So we change days to, let me just change it first to May. So should be 31st, right? But we said 1 day prior, so 30th. So we have 1.5536. So minus 1.55, sorry, 35. All right, so what's the difference now? Okay, so let's multiply it by, so the rate actually decreased, right? So times, remember the beginning balance of 100, beginning balance of accounts receivable on June 1st, right, being reinstated to the current rate. So 100 times the difference between the exchange rate at the end of June is 1.5317. Rate at the end of May, we have 1.5535. Then we have a decrease of 0.0218. So let's multiply it by the beginning balance of accounts receivable, which is 100. So we have now $2.18, a decrease. So if we have a look at the posting in here, right? So 0.218, you will see in here that is a credit, right? Because there has been a decrease in the rate. So 0.218, which is an adjustment to decrease the balance or consolidated amount of the beginning balance of AR by 218. And the corresponding will be, you will see here as well, it's part of an asset, right? It's part of an asset in there. So that's why we have 36,000 CTA, and that's being tagged as CTA net adjustment. All right, so that's the corresponding entry being passed just to recognize any decrease in so the entry in here. So we have again the exchange rate actually decreased from, let's go back to the calculator. So at the end of May, the rate to convert USD into AUD was 1.5535. At the end of June, it only became 1.5317. So there was a decrease of 0.0218, and multiply it by the beginning balance. Remember, we will only be converting the beginning balance, right? In here, it's all because this one is already being translated based on, this is a new transaction for June. It's already being translated into the current rate. But since an accounts receivable is a real account, so it has to be reinstated. Only the change in exchange rate. So at the beginning again of June, we have 100 USD. So multiply it by the decrease in exchange rate of this amount, right? And that equals to 2.18. So that's what you can see here, a decrease in amount, decrease in rate, meaning decrease in the consolidated amount of the beginning balance of AR by 218 by crediting it. And the corresponding will be against your exchange rate difference, right? which is 36,000. And we know that it's an asset, right? So net asset adjustment. That's why the memo is saying net asset adjustment there, right? Well, the other one, fresh currency, any discrepancy in here will be accounted for by the same as well, GL account that we defined on the consolidation book, which is 36,000, but that is being tagged as net um, income adjustment. So hopefully this demonstration helps on how to identify the ending spot rate, how we calculate the weighted average rate during consolidation, and as well as a glimpse of an explanation essentially of the memos that we are seeing on consolidated or consolidation journal entry. So just to wrap it up, the consolidation in here refers to the fresh transactions created during the consolidation month, and balance sheet adjustment in here as well. You can see there has been a decrease in the rate of balance sheet account. It's a balance sheet adjustment. If it's an increase, then it's going to be a debit, but in this case, going to be a decrease. And the corresponding with that one will be the CTA net adjustment, net asset adjustment, because we know that it's whether an asset liability or um, stockholders equity account, right? Those are real accounts, then this will be used then as a description CTA net adjustment, right? For the consolidation in there, there's been discrepancy because of the change in P&L account. That's why it's being tied to discrepancy or in order to balance the entry. That's what we can see here. 1532 debit, 1542 credit. So we have 10 cents difference. So that will be tagged as CTA net income adjustment. And these accounts are the ones that we have defined in the consolidation book as exchange rate difference for net assets and for P&L as well. So if I go back here, quickly, consolidation, setup, book, and we have US here. And yeah, those are the ones the GL account defined for net assets and net income. These are the ones essentially being used to reflect that. So yeah, hopefully this demonstration helps. Thank you.